If you ask 100 people how to become a millionaire, 90 of them will tell you the exact same thing. Invest in stocks, S&P 500, index funds, wait 30 years. And that works. It genuinely works. But there's an asset that has quietly created more millionaires in America than the stock market, and almost nobody makes videos about it because it doesn't sound sexy. It doesn't fit the pretty buy and forget reels format. That asset is small business. More specifically, franchises and local enterprises. And I'm not saying this to sell you a how to start a business in 5 steps course. I want to show you numbers that statistically dismantle the myth that the stock market is the single most reliable path to wealth. Here's what U.S. Federal Reserve research on household wealth tells us. The median net worth of a family that owns a business is several times higher than a family that doesn't own one, even when they both have the same income. That's not a coincidence. That's a structural difference. When you invest in an index fund, you're buying a tiny sliver of thousands of companies, but you control none of them. Your return is whatever the market gives you, on average around 7 to 10% annually after inflation, if you're lucky and there isn't a prolonged downturn at exactly the moment you need the money. When you own a profitable small business, your return on invested capital can be 20%, 40%, sometimes more, because you're not just an investor, you're directly running the asset. Forbes regularly notes that a significant share of American millionaires aren't traders or investment bankers. They're owners of dry cleaners, car washes, fast food chains, construction companies, people whose names will never show up in financial news. Okay, let's break down the mechanics, because this is where the answer to why is hiding. When you buy a share of Apple, you're buying a piece of a company run by thousands of people you'll never meet. Your opinion doesn't matter. Your control is zero. When you buy a franchise, let's say a self-service laundromat or a car wash chain, something different happens. First, you're using a ready-made, proven business model. The franchisor has already tested what works: marketing, suppliers, operational processes. You're not reinventing the wheel. You're buying a blueprint that's already proven itself hundreds of times. Second, and this is critical, small business gives you access to borrowed capital on terms an ordinary investor simply doesn't get. A bank will gladly lend against a profitable franchise purchase using the business itself as collateral. Try getting the same kind of loan to buy stocks, the bank will refuse instantly. This is called operating leverage. You're controlling an asset many times larger than your own capital, and the entire cash flow is yours, not split among millions of other shareholders. Third, small business comes with tax advantages that simply aren't available to someone who only holds stocks. Expense write-offs, equipment depreciation, optimization through the company structure. The tax code is literally written to encourage business ownership, not just paper ownership. This raises an obvious question. If it's this effective, why doesn't anyone make viral videos about it? 3 reasons. First, it's not profitable for the financial services industry. Brokerage platforms, asset managers, investment influencers with affiliate links, they all make money when you buy stocks, ETFs, or crypto through their platform. Nobody earns a commission when you buy a car wash from your neighbor. Second, small business requires actual work. It's not passive income in the classic sense. You need to hire people, deal with suppliers, sometimes stand behind the counter yourself for the first few months. It doesn't fit the invest and sleep peacefully fantasy that most financial content sells. And third, and this is the most interesting one, small business doesn't make for a pretty thumbnail. How I made money on Tesla stock sounds exciting. How I made money by running a chain of laundromats and fixing a broken washing machine on a Saturday morning sounds like work, because it is work. But that's exactly why there's less competition for attention here and more real money. I'm not going to tell you only the good part of this story because that wouldn't be honest. Small business is not a guaranteed path to wealth. Bureau of Labor Statistics data shows that a significant share of small businesses close within the first 5 years. Unlike an index fund, where your risk is spread across thousands of companies, in small business, all the risk is concentrated in one place: your specific business, your specific city, your specific employees. If your local economy collapses, or a strong competitor shows up, or you simply picked a bad location, the money disappears far faster than during a stock market downturn. On top of that, small business demands time you won't get back. You can automate an investment portfolio and forget about it for a month. A business you forget about for a month will probably go bankrupt. So this isn't a which is better comparison. It's a what's underrated comparison. Here's what I want you to take away from this video. The stock market is a great tool for passive wealth accumulation, especially if you have a steady job and don't want to take on risk. But if you keep hearing only one path to wealth, invest in index funds and wait, you're missing an entire category of people who got rich through a completely different path. And that category is much bigger than YouTube content makes it seem. Owning a small business isn't about founding the next startup unicorn. It's often about boring, simple, understandable models: vending machines, cleaning services, mobile tire repair, a local service that solves a specific problem for specific people in a specific place And precisely because it sounds uninteresting, fewer people are trying to do the same thing. I'm not telling you to quit your job and open a car wash tomorrow. That would be irresponsible advice, and I'm not a financial advisor. But the next time you hear the phrase, "the only path to wealth is stocks," I want you to remember that millions of American millionaires built their wealth a completely different way, quietly, without viral posts, without pretty portfolio growth charts. Money doesn't have to be a boring Reddit post about holding an index fund for 30 years. Sometimes money is the dry cleaner on the corner of your street, just working year after year while you sleep soundly. If you want to learn more about how money and wealth actually work, subscribe. It only gets more interesting from here.